dollar Swiss then, again, nice clean trend. Recently the dollar hasn't been quite as weak as the Aussie and the CAD, but the picture here of this trend is it's been much less volatile than the Aussie and the CAD against the Swiss. It's a very clean chart. It's a very clean chart. And we have actually to the upside, our structural long is much closer to the price action. And in many ways we have opportunities much closer to the price action in this dollar Swiss. Now, what is of note, okay, when we're thinking about the safe haven currencies, when the S&P had its washout the other day, the US dollar rallied. Terrible news from the Philly Fed, terrible price action in the S&P, we had a US dollar rally. That is, the dollar has been historically, I mean, look in 2008, okay, when the Lehman Brothers, Bear Stearns and the credit crisis began, the US dollar index rallied from like 85 up to, way through 100 and beyond, like 120. It flew after the summer months. Into October, we consolidated in the US dollar index in 2008. Rather than talk about it, I might as well show it to you. This is very interesting, and it's something we've got to be aware of. The US, particularly in view of, right, where are we? Yeah, it's 2008. Big trend down in the US dollar. Consolidation from basically the whole of the summer, April to September. You see that? Right. Q in September to October. Q, the credit crisis. What did the US dollar do? It flew. At the time, it was the prevailing trend had been down, consolidation, reversal point, there we go, and look what's happening here. Prior trend is down, consolidation, look at the time of the year, April, May, June, July, we're in August, okay, we're coming to the end of August, we've got September to go through. This is extremely similar, extremely, notably so. Okay. Now, the Swiss National Bank are threatening to intervene, the yen are threatening to intervene. If I know the world is awash with US dollars, but if it starts getting really bad, there is no reason, right, why that US dollar cannot post the same sort of reaction. It is not how much bad news for the US dollar has there been. We've held the 73.50 area. Okay, watch that. In terms of going back to dollar Swiss, now we're closer to a structural long. That structural long is the 80.81. So what I just explained in mind, this represents, okay, a reasonable trigger. We may have to wait for it, but at level we have to be. So 80.81 is a structural long. Structural short is 77.69. Last week's low. Be the break of the gift here. So 77.69 is a structural short. 200 tick wise, the short point is in the dollar Swiss, the short point is 79.60. Excuse me, 78.06. So it's the low made in, we're taking into account 2 daily lows. It's the low made in the US session, just here. Your short point is 78.06. Your short stop is taking into account the 2-day low. So your short stop is going to be 78.30. So your short is 78 and your short stop is 78.30. On the buy side, we have 79.60, which is the 3-day high. The structural long is 80.81, so it's still 100 odd pips to get to the structural long. So 79.60. There, if we see some strength in US dollar, the highs made in Tokyo. If you're going to go long there at 79.60, you want your stop at 79. Just, you don't want to give this too much room to come back against you, because it's shown us how many times it's done that. Once, twice, 3, 4, 5 times. You want your stop in here at 79.35, or closer. Okay, so the long 79.60, the long stop 79.35. So far on this 200 tick, that Aussie switch is the best.